How much will Bitcoin cost at the peak of this cycle, and what are its prospects for rising to $200,000? The truth is that for most of you, doubling your money in the crypto market would still be quite a success. You know from your own experience, you've seen people who are involved or observing from the sidelines. Know that in the past few months, most have lost money in crypto. Only those who were shorting could have made money during this time, especially if they were investing a significant amount of capital. But the vast majority who tried to play these declines with leverage lost even more. So the vast majority would currently just dream and would gladly give up their entire portfolio for a twofold return if they knew that a situation like the current one would occur. So let's see, my dear friends, what needs to happen, what the chances are, and by when potentially, and whether Bitcoin can even cost $200,000. It's an amount that would probably be quite satisfying for most of us, especially when on KDP, for example. Since 2022, we've been accumulating Bitcoin, and my average entry on Bitcoin is $22,000. It would be a fantastic result, even beautiful. But is it possible? We'll see how it might turn out. So I invite you to this material. I believe that, with full humility, one should listen and see, because such a 50% profit or 100% profit could help many of you recover your portfolios. If you've lost 50%, you need to earn 100% up, right? That's why a Bitcoin that would double could be a safe haven for many, and a remedy, a solution for what happened in the previous months, just more calmly and safely. And if someone holds Bitcoin, and most of you have at least some parts, especially those who have a lot, I encourage you to watch. So generally, these price forecasts, the moment when we don't know where we are on the board, evoke a lot of extreme emotions. Here among us, people like it, especially because that's when many people join the market. So the question is, how should we approach all of this? Does it make sense to attach ourselves to any specific price levels? Well, there are many opinions on this topic, but in this video, I will try to explain it as clearly and precisely as possible without beating around the bush. I'll present it to you in detail and describe it here in a way that everyone can understand, making it measurable and possible to implement in your own scenarios that you are playing out independently. So what do we have currently? Well, currently Bitcoin costs $90-something thousand. A lot on the chart indicates that the 4-month correction in crypto is coming to an end, especially this broad and large one. Of course, this doesn't rule out some pullback, flash crash, or quick drop. It oscillates, suggesting it could be 8-10%, and then further increases, which will be a bit calmer, because this rebound was very strong. We're growing over 1% daily, I believe, for the past few weeks. So this is one of the stronger moments in this cycle in terms of price rebound, but it will probably slow down after a small pullback, and we'll be rebuilding here. I bet that in May we can definitely surpass the all-time high. It is highly probable. On the daily chart, we have broken through several significant resistance levels, including the downward trend lines visible on your screen, and the resistance from the 200 EMA. And here we are staying above these levels. I think this somewhat confirms that the buying power is substantial, that's for sure. And perhaps another rally towards the all-time high is coming, followed by a phase of discovering new price peaks in a growing speculative bubble. And as the price starts to rise, well, naturally, the sentiment around Bitcoin and the entire cryptocurrency market improves. And with this improvement in mood and price increases, the discussion about what Bitcoin's all-time high will be returns like a boomerang. One person says the all-time high has already happened. Another says it will never surpass the all-time high from the previous cycle. A third says the all-time high will be in the millions of dollars, and a fourth says 130,000 and then exits the market. Everyone has their own story. Everyone has their own narrative. Never mind that 80% or more of these people won't stick to what they planned and won't sell at those levels because they'll want more. But indeed, somewhere in the industry press, in the media, we can read many interesting opinions, especially from people who have been in crypto for a long time. Because, if my tech from the block tells you that Bitcoin is going to the moon, or if a taxi driver says that based on his analysis Bitcoin will cost this much, it doesn't matter, because these are not people who could influence your decisions, and you should filter such information. Why should you listen to a friend who joined the crypto market a month ago? Why should you listen to some fool from the neighborhood who talks nonsense? Or a coworker who, earns a few bucks and really doesn't have much knowledge about investing, but acts like a know-it-all, claiming he knows everything, right? It's clear that even opinions from people who have been in the industry for many years should be taken with a grain of salt. Even mine, right? It's not like I know everything. I'm not trying to suggest that you shouldn't listen to those who are new or less wealthy, right? God forbid, only those who have been in the market for years and have achieved something. The point is, you simply need to take into account the information from various people around you. And even when you're watching me, don't just watch me. Watch some English language videos, for example. Check out content from people who inspire trust, and take an average from them. Based on this average, which is a consolidated opinion from several sources, then make some moves, right? And here, for example, we can indeed consider the statements of Charles Hoskinson, co-founder of the Ethereum network and founder of Cardano. He recently stated on CNBC that Bitcoin could reach a value of $250,000 this year, which is 250,000. According to him, the market will get used to the trade war between the US and China, and this, combined with the easing of monetary policy, will release fuel for financial markets, which in turn will drive further adoption of crypto. This will be perceived not only as an alternative to the traditional stock market, but also as another hedge against inflation, where Bitcoin itself is already somewhat fitting into this role. And many people believe it is a great tool to protect against inflation, which I consider a valid line of thought. And when it comes to the sequence, but this time cause and effect. Look here. According to him, the price of Bitcoin could more than double 2.5 times from today's all-time high in the next 8-7 months. So I think it's quite an interesting theory. Another veteran, this time, Mr. Adam Black. He goes even further with bolder predictions. A few days ago, he announced that Bitcoin will reach a price between $500,000 and $1 million in this cycle, not in 5, 10, or 20 years, but in this cycle. And for those who are, bearish, I think he left a message in his statement that you are wrong in any predictive models, and diminishing returns principles do not work. That's his theory. I believe it won't be that way, but there is a chance for a super bull market in boom. Right after such great doubt, where, the States ruined people's hope in the crypto market most, couldn't handle it, sold off, fled in panic, decided it was pointless. And then the market, after such months-long purges, were people like veterans in a war. The last remnants, on the battlefield, unfortunately leave, defeated, thus leaving room for growth for those who endured, who are only now buying. Because look at the situation, right? For a few months, they were selling Bitcoin, selling all sorts of cryptocurrencies. And now those people who were selling have left the market. They're gone. There's no more selling pressure from their side. There's no additional supply and no compulsive selling of those cryptocurrencies. Two people who withstood these declines. There is no doubt that they will sell these cryptocurrencies with a larger sample size of such error, statistically, at levels lower than the all-time high, and the values from which they were holding, or somewhere at these selling values will be enough. If they endured these declines, they won't get rid of them quickly. That's the second thing. The third thing is that people will return to the market later. Those who sold will buy at higher levels, and then decide not to sell until some point in the future. And fourth, there will be new people entering at certain levels, possibly selling off during corrections. Someone will add to these levels, and they will buy back again due to FOMO, and this spiral will continue. So I seriously believe here that Bitcoin has the potential, given how well it held up in recent months, despite such a strong downturn in global markets, to actually reach $180,000, $160,000, $200,000 this year. Another person, one of the most well-known investors in the world, at least in the media, Robert Kiyosaki, author of the book Rich Dad, Poor Dad. By the way, most of these books, in my opinion, are quite trivial and they nicely introduce a trend of ideas for people who are just starting with investments, crypto, or business, but ultimately they don't offer much because there aren't many methodologies presented that can be practically implemented, right? But okay, let's move on with the predictions because there are also less ambitious price bids, such as the prediction from the new report by the company 21 Shares. This is the same company that, along with ARK Invest, holds ETFs on crypto. And in their report, it can be read that Bitcoin could reach $138,555 by the end of 2025. And they point to the likelihood of a great similarity to previous market cycles. And that on-chain analysis also leads them to this conclusion. This entire analysis highlights macroeconomic uncertainty and the narrative of a safe haven, as well as growing investor confidence, as key factors driving the further increase in Bitcoin's price. Another analyst, who was vocal about Bitcoin potentially reaching 200,000, is Arthur Hayes. Where does this prediction come from? Well, he doesn't focus on any mathematical model. Instead, he looks strictly at liquidity and a few days ago described his forecast in an essay titled Skycat. I encourage you to read it. He addresses very important macroeconomic issues there, which are worth studying independently. And for the purpose of this video, I found a summary of this essay on Twitter. We start with the fact that on April 2nd, the infamous Liberation Day, it wasn't really about the tariffs themselves. That day, Trump caused a huge commotion in the financial markets, which was reflected in the MOVE Volatility Index, which reached a level of 172. And it was about making the tariffs seem like they were in the background, not what was shown to people, to cause a massive sell-off. Because a few days after this event, Trump announced a 90-day pause for everyone except China. And on top of that, we received bullish signals from the Fed and the US Treasury. In short, it all comes down to the fact that such high volatility is unacceptable, and the appropriate entities will have to intervene to stabilize the market situation. And here, Hayes writes, that the first sudden pivot regarding liquidity improvement in the 25th year has just begun, and the secret weapon of the Treasury, which is supposed to fix everything, is buybacks. And this is not QE performed by the Fed, but it's an equally powerful tool. Let me explain why. Because it allows for the issuance of new debt, and with the obtained funds, the Treasury buys older, less liquid securities, commonly referred to as off-the-run. And this means that the Treasury becomes the sole buyer. Then it has a monopoly, and pays its own way. And this mechanism helps RV funds close short futures positions with a profit, releasing large amounts of cash, which among other things, flows into the Bitcoin and altcoin markets. So here we are dealing with a clever improvement of liquidity, because the Treasury takes matters into its own hands and shows that immediate intervention from Powell is not needed. And it so happens that such a mechanism occurred in the third quarter of 2022, precisely when Bitcoin was approaching its cyclical low. And also at that time, the then Treasury Secretary, Janet Yellen, unlocked $2.5 million of liquidity, which translated into the beginning of Bitcoin's rally. And let's also note that these increases began while the Fed was still raising interest rates. So this also nicely shows us that the Treasury itself can take matters into its own hands and push the markets higher. And the current Treasury Secretary, Scott Bessent, is a more savvy player than her when it comes to financial markets, as he is a former hedge fund manager, and his mentor is George Soros. Together with Soros, he was behind the attack on the British pound in 1992. They made about $1 billion shorting it. And now Bessent, as the Treasury Secretary, has decided to improve liquidity through buybacks. And it's also interesting. Do you know who's really in charge there now? People who had planned attacks on foreign currencies. And some, large, coordinated interesting projects that led to the decline in the value of currencies that were not the native currency. So it's interesting. And now it looks like the state treasury needs RV funds to maximize leverage. And it's just starting buybacks. The Federal Reserve is slowly ending QT. And this is a mix that increases market liquidity. And Bitcoin is a beneficiary of such actions. And while gold has performed excellently so far during greater chaos, Bitcoin should now emerge from the shadows and start to rise once the state treasury's actions take effect. Ultimately, gold and Bitcoin are simply two great assets for the current times. And Hayes also wrote that the real fun will begin when Bitcoin surpasses its all-time high from January and enters the price discovery phase, which we've already discussed, because the buybacks implemented by Scott are supposed to be the main driver for Bitcoin on its way to $200,000 this year. And although Arthur Hayes also added at the end that perhaps the $200,000 level might not be reached, Bitcoin should still perform well under these new market conditions. And also, Bitcoin is expected to be the first asset, that will react positively to improved liquidity. I believe the entire market is noticing this now. Just look at the last 5 trading days on American spot Bitcoin ETFs. You can see here, look, that during this period, traditional investors bought Bitcoins worth nearly $3 billion in 5 days. So things really took off here. And one of these funds, namely Fidelity, announced that the supply of Bitcoin on exchanges is continuously decreasing due to increasing purchases by public companies. And we are simply witnessing a growing demand for digital gold, despite considerable uncertainty on the international stage. Because 5 or 10 years ago, Bitcoin reacted much worse to such geopolitical conditions. But today we simply see that serious investors want to have it in their portfolios. So you've probably also heard the saying that Bitcoin acts like a sponge during liquidity improvements in the markets. And perhaps we are now witnessing how the largest institutions, as well as increasingly savvy retail investors, are positioning themselves for the liquidity improvement in the markets, which is to be initiated by the U.S. Treasury through the aforementioned buybacks. And this is currently the most important model for Bitcoin that we should be observing. The situation is very volatile. I will keep you updated, so remember to subscribe to this channel. And the question is, who is right? Right? Is Bitcoin actually capable of reaching $200,000 in this cycle? Well, it's known that the truth usually lies somewhere in the middle, because some say 1 million, others 200,000, a third says 130, and someone else says it's a bear market, right? So let's say that on average it's, for example, 200. The main point is that there are as many opinions as there are traders, especially when a topic concerns such a hot issue as setting an all-time high for Bitcoin, and no one is really able to predict it completely. Some remain more bearish, while Bitcoin maximalists, let's call them that, like Michael Saylor, are making claims about a multi-million-dollar price for Bitcoin in just a few years. And what does history and price charts tell us? What do popular mathematical models say? What do on-chain data say? Let's check it out. Firstly, I personally think that we shouldn't expect similar returns from Bitcoin as we saw in previous cycles, right? The times when Bitcoin would grow 100-fold or even 30-fold from the halving. Over a 4-year cycle, 3 years in total, are gone forever and won't happen again. And although many investors would wish for it, hoping that history would suddenly glitch or some error would occur, the market cap is too large, there are too many people in the market, and it's already too common an asset. It's not about discovering that Bitcoin exists, but rather where it can potentially go. So, The truth is brutal. Bitcoin is subject to the law of diminishing returns. This is a phenomenon we observe after each halving. And in short, it means that the increase in Bitcoin's price after this event becomes smaller with each halving. The first in 2012 resulted in a 100-fold increase in Bitcoin. The second in 2016 saw Bitcoin increase 30-fold. And the third, halving, from May 2020 to the peak in 2021, made Bitcoin 8 times more expensive. We're talking about the price from the halving, right? Not from the cycle's low to the end of the cycle, because those were even higher values. For example, 20-fold in the last cycle. And with each cycle, the increase from the day of the halving to the all-time high becomes less and less spectacular, which indicates the phenomenon of diminishing returns. If we assume that this predictive model will prove accurate once again, then after the fourth halving, which took place in 2024, we expect that the potential price increase will be around 250 to 300%. Roughly speaking, Bitcoin pumps 3 times less after each halving. That's roughly how it turns out. It's one of the metrics, right? So if the price of Bitcoin on the day of the halving, April 20th, 2024, which was exactly a year ago, was $65,000, then according to this model, Bitcoin could actually be oscillating between $180,000 to $250,000 per unit by the end of 2025. And although it will still be a significant increase, it won't be as drastic as in previous cycles, because these diminishing returns are a natural effect of the market maturing and the growing adoption of Bitcoin. Bitcoin at $1 million? Not in this cycle, my friends, but in a few decades. It is definitely possible. It's possible that something will happen after 2030. For example, Bitcoin might reach the top of some political or national hierarchy, and there will be huge plans to make it some kind of global reserve currency or something like that. I'm getting a bit ahead of myself with these facts, thinking out loud. But if that were to happen, the chance for $1 million is there, and it's not something unattainable. Then, of course, Bitcoin's market capitalization could be very close to that of gold, right? If we look at the biggest assets, we see that, first of all, Google and Amazon have gotten back on track a bit. Bitcoin is now 7th, not 5th again. Secondly, currently, physical gold, after the recent increases, has a market capitalization of $22 trillion, while Bitcoin has about 2, just under, right? So if Bitcoin were to reach the current market capitalization of gold, it would cost about $1 million, and gold might be even more expensive then and still be first, with Bitcoin second. I believe that in the long term, this is entirely possible. Bitcoin meets all the parameters and has everything needed to truly grow in the long term. If various countries and guidelines introduced against such actions, and the self-fulfilling prophecy that Bitcoin has been presenting to us for 16 years do not contradict this regulatory-wise. So, besides using a crystal ball or analyzing cycles to predict the future price of Bitcoin, we can use various mathematical models. It's worth relying on this. It's something that often proves effective. For example, there is a rather controversial, specific, yet popular model called stock-to-flow. It compares the existing supply of Bitcoin with the annual production to determine its scarcity, right? Initially developed for precious metals like gold and silver, this model was adapted for Bitcoin by the analyst Plan B. In 2019, we obtained the stock-to-flow ratio by dividing the total supply by the annual production. And a higher stock-to-flow ratio indicates greater scarcity. That's scarcity, right? A cool word, really, meaning something that's unconventional, rare to own, unique, desirable, and, theoretically, this leads to a higher price for Bitcoin. Bitcoin has a fixed supply, which is 21 million units. Now, just under 20. About 19.8 million Bitcoins have been mined, which doesn't mean that many are in circulation. There are far fewer in circulation. Most are completely immobile in wallets, plus some have been lost. So realistically, there are only a few million Bitcoins actively circulating. This makes it particularly suitable for this model, because after each halving, the annual production rate decreases, which causes the ratio to increase. And Plan B's model previously predicted significant increases in Bitcoin's price based on this principle. However, it is controversial, as I mentioned, because critics argue that it's too simplistic to be true, and that the model only considers supply while generating demand, right? Additionally, external factors such as regulatory changes or technological developments can significantly reduce the accuracy of this model. And that's true. In my opinion, that's also the case. But it's one of the things, one of the indicators, one of the models. Another interesting metric here for estimating the future price of Bitcoin in a mathematical way. So, this is the Powell law chart. And in short, it's a mathematical law that describes the relationship between two variables, where one variable has a strong influence on the other, and this relationship is nonlinear. In the context of Bitcoin, Powell law can be used to model the price growth of this cryptocurrency based on its price history. On the chart in front of you here, you can see that the price of Bitcoin in the past has increased in line with the long-term regression line. And the current price is within a growth pattern that could eventually lead to further price jumps, right? And Powell law also predicts that Bitcoin will reach even higher prices this year and exceed $100,000, with the possibility of reaching $200,000 by the end of 2025, if the current growth trend and market cyclicality are maintained. Next, we have the rainbow chart. There's also a caveat to this. This is one of the models that helps predict the future price of Bitcoin based on historical data from 3 halvings. This model does not take into account temporary market frenzies. It focuses more on a stable, long-term trend. So how does it work? Namely, it shows how the price of Bitcoin could develop in the future, but only if the trend from previous years continues. It is based on 3 key halving moments. November 28, 2012, when the price of Bitcoin was $12. July 9, 2016, when it was $651. May 11, 2020, the price was $8,591. And on the chart, we see bands that indicate the range in which the price of Bitcoin might develop. In relation to the established trend, each band has a different interpretation. The red one is the least likely price. This is the peak of the channel, which indicates a price well above the current trend. It is a scenario that under normal conditions is unlikely, but theoretically possible. That's why it's there as the top of it all. The yellow band. Well, also unlikely, but possible. This is a level that can be reached, but it is more distant from the current trend. It could be a higher price than the current one, but still within the realm of possibility. And the green band is the probable zone. Here, Bitcoin will likely move in line with the current trend. This is the zone where it has the greatest chance to maintain itself. And currently, the price of Bitcoin is in the blue band, which means it is in line with the predicted trend. And it could potentially get better, as this suggests that Bitcoin is following a stable growth, consistent with the market's previous development. If Bitcoin reaches the red zone in the 25th year, well, that's the least likely, but then the price would be $400,000 by the end of that year. The most likely zones are the yellow and green ones. According to this, Bitcoin has a chance to cost somewhere between $160,000 and $220,000. As you can see, there are plenty of predictive models. Each of them indicates slightly different values for Bitcoin at the end of the year. But there is a common denominator, namely these valuations at around $200,000 are, well, simply indicated to occur in terms of the cyclicality of historical models, mathematical models, and generally most things that suggest how Bitcoin will still lead the way. This year, adoption is also slowly helping. So although some models predict similar prices, the specific values differ depending on the tool used. It's important to remember that not all models are perfect, and they are not without flaws, right? Models work until they stop working. So what's the conclusion from this? In practice, we don't need to know the exact price of Bitcoin to make a profit. We don't need to predict the future. What's more important is that we know how to properly and correctly react to what's happening, right? So, at any given moment, when something happens, we just need to know what to do. Markets are volatile, and predicting a specific price is largely impossible. Instead, it's worth learning how to react to these changes and the signals provided by indicators and tools during the market cycle. That's exactly what these are for, to help us make decisions based on data, not assumptions. And remember, it's not price forecasting that is the key to investment success, but rather the ability to react to changing market conditions. I also told you earlier that one of these volatilities is liquidity, right? And currently, a significant portion of investors are simply betting on the fact that liquidity will improve due to the state treasury's interventions through buybacks and the gradual ending of QT by the Fed. There are also other indicators worth following in this cycle, but there are many interesting indicators from technical analysis that will allow us to sell assets at the right moment. We don't have to guess whether Bitcoin will reach those 200,000 lows by the end of the year or not. It's simply better to look at the RSI on a long weekly or monthly interval and looking at the Bitcoin chart in such a time frame. Now, on a monthly scale, we see that an RSI above 80 points has historically been a good period to sell crypto. And if we respond appropriately to this signal, it could turn out to be profitable, right? When it comes to on-chain indicators that help us respond to the current price of Bitcoin, one worth noting, though not perfect, and not one that's been with us from the start, but still interesting, is the P-cycle top. It is based on the intersection of two moving averages, the 350-day EMA and the 111-day EMA, which is additionally multiplied by 2. And when these two averages intersect, it often indicates a potential peak in Bitcoin's price just before a bear market. Why is this indicator cool? Well, because the P-cycle top is valued since it was created in 2019. It proved its effectiveness in identifying moments when Bitcoin was reaching its first peak in 2021. The tool is exceptionally easy to use. No complicated calculations or speculations are needed. This helps investors capture moments when it's worth considering taking profits. We don't have to precisely guess the price of Bitcoin and whether Bitcoin reaches $160,000, $200,000, or $250,000. Doesn't matter as much to us as long as we have other interesting indicators signaling good moments to sell, regardless of how much it costs, right? Because MVRV Z-score and VDDM are two of them that I regularly check and update you on Telegram. They also help investors determine whether Bitcoin is overvalued or undervalued at a given moment, and when the MVRV is above 6, it indicates that Bitcoin is most likely overheated, and the market might be exactly that, overheated, overhyped, and in such a case, investors, meaning us, right? We can sell, simply consider. Decide that, okay, it's too expensive, I'm getting out of this, I don't want it anymore. That's enough, I'm cashing in the profit. Thank you, good night. And the next thing is value days destroyed. This shows similarly. Well, we can see here that despite the pump from 74 to 94,000, Bitcoin is still undervalued. Currently, according to this indicator, you don't have to be a genius to deduce what happened with the price a few months after VDDM told us that Bitcoin was in a green zone, meaning the undervalued zone. Purchases then, meaning now all the time, despite these increases, were simply profitable. And Bitcoin each time back then rose at least 100% from the local low marked in the undervalued zone, meaning from 74,000 it could currently go to $150,000. Another indicator shows that at least 150,000 for Bitcoin should be reached this year. That's why I remain bullish for the coming months. Why is this and that an interesting tool and worth attention here? Well, because they provide simple signals, specific indications, that allow reacting to market conditions, which can currently be used to detect extreme moments when the price of Bitcoin significantly deviates from its real value. That's also great, which is why I like to analyze and observe them. So instead of predicting the future with an accuracy of a few $1,000s, we can react to market signals, which allows for making more informed investment decisions. But to make use of all these indicators, to know what's going on, to know how to interpret and analyze them, you really need to learn a bit first. Not just listening, but also practice. And in the crypto world itself, we are not short of forecasts that point to various, sometimes extreme, values of Bitcoin in the future. You can't trust opinions uncritically, especially those based on predictions without solid foundations. Mathematical models are tools that help us understand the market, but let's remember, they are not infallible. It's about combining all these various things that we use. For example, let's take a look at sentiment. Okay, everyone is talking about Bitcoin. My views have increased a lot. Everyone is FOMO, pointing out altcoins that need to be analyzed, and so on. But for example, on-chain indicators, technical analysis, and a few other things, cyclicality, historical data, do not show overheating. This could be an anomaly, and it might turn out that it will last a bit longer, right? And you need to combine these and just smoothly navigate, not based on a single indicator, because that's not measurable, but rather merge the resultant and average from many opinions and information, simply summarize what's happening. That's why I have a team. That's why I collaborate with other people to be able to objectively gather information and not just live in my own bubble. So I try to prepare and present it to you in a concise, substantial form, objectively, as much as possible in the form of a report, and just do it correctly. So if you appreciate this, subscribe to the channel. Give a thumbs up on this video. So we don't predict, we just react to what the market shows us. And thanks to various indicators, we can make more informed decisions based on actual data, not just speculation. And in practical investing, reacting to market signals is often more valuable than uncertain forecasting of what will happen. And the key is the ability to adapt to a changing market, rather than sticking to rigid assumptions. So, as I previously assumed, that Bitcoin would reach levels between $130,000 to $160,000 in this cycle, I'm raising the bar a bit, and believe that $150,000 to $200,000 is quite possible and realistic. I'm raising the extreme levels of these ranges by a good few percent, around 20 or so, and I believe such values will be possible. So if you're satisfied with 50, 100% profit, 110% profit, if you sell well, or maybe more, we might go to 250,000, or maybe less. This is fraught with risk. We never have certainty, but there are various data and facts coming from everywhere that suggest this might simply be the case this year. A lot of things can also go wrong politically, regulatory-wise. But if that doesn't happen, if conditions hold, then potentially it will be good. Well, where else would you invest to potentially make such money on a relatively safe asset, which is the 7th largest asset in the world, was recently the 5th, and sooner or later will catch up to gold? In my subjective opinion, it's worth having Bitcoin. And that's it. Take care. See you.